Zacks rank buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks rank buys. We're going to talk about a couple of more aggressive growth stock pick ideas with Bill Wilton, our aggressive growth stock analyst at Zacks.com. He's been kind enough to put a couple of suggestions together for you. So, companies that he's written about recently. Encore Capital Group being one of them. Ticker symbol ECPG. They are in the consumer debt business, huh?
Yeah, what they do is they buy up various types of debt, anything from healthcare and telecom bills to credit card loans, auto loans, things like that. So those are the people that are going to find a way to harass you until you pay, X amount on the dollar.
Why are they in the substandard market?
Well, no, not necessarily. But I mean, what's happening is a lot of these companies are trying to clean up their balance sheet, get as much for, their outstanding loans as they can because they need cash right now.
I see.
Similar to the problem that consumers are having. So as a result, their business is doing pretty well. Collections were up 29% last quarter. This led to earnings per share of 37 cents, which beat the Zacks consensus estimate by a pretty sizable margin, a 9-cent beat there, which saw estimates rise immediately after that. So we're looking at pretty impressive growth rates of 66% for 2009 and 22% for 2010, because they haven't quite reported their full year yet. Because those estimates were surging, we are trading at a good value here with ECPG. We're looking at about 10 times forward earnings, a PEG ratio, a couple hundred basis points below 1, and 20 basis points below 1. It did slip to a number 3, but that's because it's kind of a finicky time of year because their estimates are a little bit older. Once there hasn't been a new estimate in a while, that's when you'll see these the rank fall off when there's new, fresher estimates for other companies in there. So this is not based on any downward revisions. It's strictly because their former estimates are a little bit old.
Yeah, in your article that you wrote on them recently, you called it a bargain.
Yeah, absolutely. If you can get that kind of growth rate at a PEG of 0.8, that's a great deal for you. When they go ahead and report earnings announcements, they haven't announced what date it's going to be, but it should be within the next few weeks. We'll see if that bargain can remain. I see shares should be going up because, as you can see here, the consensus estimate for the full year levels have been on a tear lately, and usually, that's what's going to be driving those the stock price up.
Okay. And then RPM International is another one that you've written about recently. RPM, the ticker symbol. How much horsepower is in RPM?
Well, actually, what they do is
I couldn't miss that opportunity.
I wouldn't put it past you, Terry. But they do a lot of sealants and specialty compounds like that. You might be more familiar with their consumer brands like Rust-Oleum,
yes, DAP,
things like that. They also have a commercial side, which obviously people are going to be less familiar with. But their quarterly reports came in on January 6th. They did a great job. Net income was up 34% despite a slight decrease in sales. They just happened to improve their margins by that much. Earnings per share was 43 cents, an 8% beat, another sizable margin. They have some pretty solid growth rates. You wouldn't think that business would be able to expand that fast, but we're looking at earnings growth rates of 35% this year, 14% next year, and this was their second consecutive surprise.
So does that say that more homeowners are more than willing to try to do it themselves before they call on?
I think it's a portion of that, and it's also, they've done a great job of managing their costs, bringing inventories down and things like that, which is what a lot of businesses have been doing. The one caveat was that it was about a 3.5% decline in sales, which you really don't like to see, but a lot of things can go into that. And as far as a company like this, that just puts them in even better position for when things really start coming around and everyone's doing, those home improvement projects.
Right. Springtime is when that generally happens.
Correct. They're also trading at a pretty fair deal right now. We're looking at 14, 15 times forward earnings. The PEG ratio is right at 1.0, which makes it a fair value. That's the benchmark for growth at a reasonable price. And the stock remains the number one because, like I said, they've had a little bit more recent earnings history, so we're seeing those estimates over the past few weeks.
Stock price has been climbing, but is it beginning to level off? Is that what I'm kind of detecting by the chart?
Well, what you want to look at in this, the reason you put trend lines like this on there is so that it kind of takes away the noise, because you can see the stock fluctuating back and forth.
Right.
But if you look out far enough, it's an upward trend. So, one of the things that is tough for people to ignore is that noise, the back and forth. You want to look at the overall trend. Then you look a little bit closer at that noise to try and get a better entry point. As you can see right now, shares are toward that bottom trend line, which means if this continues, you're getting in at a pretty good price. You can expect some fluctuations, but hopefully the trend's going to continue and you'll get a slow, steady increase.
It's a good point. I'm glad you clarified that about the noise factor when looking at these charts. Do you own either of these two?
I do not.
All right, check out more Zacks Rank Buy stock pick ideas on our homepage at Zacks.com. In the upper right-hand corner, you know where they're at. I keep telling you. We put 4 new ones up there daily, one in each of the investing categories that is written about on Zacks.com. And with Bill Wilton, I'm Terry Ruffalo.